Hey everyone, Airbnb reported second quarter earnings results, which I'm going to review in this video. Coming into the quarter, Airbnb stock was rated as a buy for me. I'm going to update that recommendation in this video. In fact, Airbnb came into 2023. I had Airbnb rated as my top stock to buy. After the stock price increased by a little over 50%, I said, all right, it's enough. Let's take some profits from Airbnb. So I downgraded Airbnb from my top stock to buy to just being one of my top stocks to buy. So we're going to want to tune in here to see if I'm changing Airbnb's recommendation again. So total revenue in the quarter increased to 2.5 billion. This was up by 18% year over year, and net income increased to 650 million, up from 379 million in the second quarter of 2022. Airbnb's year has been excellent, and in fact Airbnb is having a grand old time ever since economies started reopening and people started unleashing that pent up demand for travel, which does not seem to be ending anytime soon. It was one of the reasons why I had Airbnb stock rated as my top stock to buy coming into the year. The stock price was not expensive, and I could tell from the data I was looking at that consumers were starting to unleash that pent up demand for travel, which has been significantly lower than before the outbreak, and it's still lower than before the outbreak, even though people have been traveling more frequently. GBV, which is gross booking value, increased by 13% year over year to 19.1 billion. Remember, Airbnb doesn't own any of the properties that are listed on its platform. It's one of the reasons why I like the stock and I recommend the stock as a buy. It runs an asset light business model, which you've heard me say time and again is very lucrative and is one of my favorite business models to invest in. It just operates the platform and encourages folks to list their properties on their platform, and then encourages people looking to travel to come visit the platform. So it just brings together travelers and hosts, and it takes a fee from each transaction that happens on the platform. And as you can see from the net income and cash flow, which we'll talk about later, the business model is lucrative. Active listings on the platform increased by 19%, exceeding 7 million. Now, hosts on the platform are pretty smart people, right? They realize that consumers are unleashing pent up demand for travel, so they're getting into the hosting business. They're finding ways to list that extra room in their apartment on Airbnb, maybe converting their garage into a staying place for guests on Airbnb, maybe purchasing a property and turning it into an Airbnb rental. Whatever the case might be, people are trying to find a way to list properties on Airbnb because they realize that friends or family members or coworkers that it's a lucrative business, right? They're able to charge very high rates for people coming to stay at their place. It's a profitable business, and so more and more people are listing properties on Airbnb, and you can see that in active listings, which increased by 19% year over year. ADR, which is the average daily rate in North America, decreased by 1%. Finally, after several quarters of rising average daily rates, the average daily rate decreased. Although, if I look back in the most recent quarter, average daily rate was $166 in Q2. If I look back to 2019 second quarter, average daily rate was $117. So the average daily rate is still significantly higher than where it was in 2019. As with everything else, right? Prices are higher than they were in 2019. Inflation is persistent and it's been going on for a while now, and so prices are higher. Cash flow from operations increased to 909 million. That was up by 13% from last year. Now let's do an interesting calculation here. Take the cash flow from operations of 909 million and divide it by total revenue. That's a very strong percentage of sales that turns into cash flow from operations to Airbnb. That's a greater than 1/3% that turns into cash flow from operations. This is what I mean about these types of business models being very lucrative. And several of my stocks in my list of top 17 stocks to buy right now in fact, operate under this business model. And this is one that I really like. I especially look out for businesses that operate in this model and they operate effectively in this model because it's lucrative, right? It's very lucrative. Airbnb just benefits from the organic demand from people that want to travel and also the organic demand from hosts that want to make money, right? They want to make money. They want to serve those people that want to travel. And so Airbnb just makes that possible. And by doing that, by operating that platform effectively, by giving hosts what they need to operate effectively, by giving guests what they need to encourage them to sign up, it really just feeds on itself and it's a positive, virtuous cycle. Airbnb is forecasting third quarter revenue growth of 16%, so a deceleration from the revenue growth from the second quarter to the third quarter. But remember, the third quarter is Airbnb's busiest travel season. It's where Airbnb generates the most revenue and the most profit. So it's understandable that the growth from the previous year is not as robust because this was the prime travel season last year, and last year it was like this year, but even more so, where people just increased the amount they spent on traveling year over year. So it's a tough comparison compared to last year for Airbnb. Also, the company is expecting a higher take rate in the third quarter, and this is no surprise, but I'm glad that Airbnb is finally pulling this lever. Up until now, they had said they resisted increasing this take rate because they were just focused on increasing natural organic demand on the platform, listings and um, traveling. And so they were concerned that if they increase this take rate, they might discourage some hosts from listing on the platform. But now that they see that demand from hosts is so strong, active listings increasing by 19%, they can go ahead and capture that extra percentage that they take from each transaction starting in the third quarter. So I suspect profitability to be higher in the third quarter due to this higher take rate, and revenue to also increase at the midpoint of 16%. So the good times continue to roll for Airbnb. The rate of growth is decelerating, although I think this growth will continue for another year or two because, like I mentioned, overall spending on hotels and resorts and travel is still below the level it was at in 2019. It's still below that level. So even though it's recovered strongly, it crashed big time. It went from 1.5 trillion in spending on hotels and travel all the way down to 610 billion in 2020. And so from that low point in 2020, we've been rebounding strongly, but it's still below the 1.5 trillion level in 2019. So as strong as the rebound has been, there's more room to go before we get back to the levels we were traveling in 2019. So the good prospects continue for Airbnb, and I will reiterate my recommendation for Airbnb as one of my top stocks to buy right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.